Hi, and welcome to a new episode of The Value Creators. We are here at IPEM Paris, and it's really an honor to welcome today Thomas Friedberger. He is Deputy CEO of Tikehau Capital. Welcome, Thomas.
Good morning, Stefan.
So what can you tell us about Tikehau Capital?
So Tikehau Capital is an investment company. It's a GP, a European GP, based here in Paris, with a global reach. We are 750 people, 20-year-old company founded in 2004, listed on Euronext Paris since 2017, managing about 40 billion euros of capital in private and public assets, mostly private, in private equity, private debt, real assets, so real estate and infrastructure, liquid strategies, and special situations.
And what can you tell us about your operating model now?
So I think there are two angles that are important in our operating model. First, we are highly capitalized, which allows us to align interests. So we have 3.1 billion of shareholder equity, which is a lot of capital for an asset management company. And this amount, so the listed company is a balance sheet of about 5 billion euros, so 3 billion of equity plus a bit of debt. The invested portfolio is 80% invested in our own funds. And as Tikehau employees own 57% of the capital, interests are deeply aligned, and we believe a lot in this model. The second angle is the local sourcing, hence the opening of the office in Luxembourg. We have 15 offices around the world on 3 continents, Asia, Americas, and 9 offices in Europe. In those offices, we tend to cover local LPs, local investors, develop partnerships locally, but also invest locally. And we think that the deglobalization will bring more local ecosystems, and that local deal sourcing will be more and more important going forward.
That's a very interesting model. And what are your expectations before investing into businesses?
Well, we are looking for good deals, and as we say, good deals have no wheels. So hence the local sourcing. Right now, our take is that the new paradigm in which the world is entering, with higher interest rates and a strong headwind also coming from deglobalization in terms of potential growth, will bring two sorts of opportunities. On one side, mega trends will continue to bring high growth in a world of much lower growth. So we are trying to capture some of those mega trends where we have expertise. So energy transition, for example, where we've been investing since 2014. Cybersecurity, where we are managing the largest venture capital fund in cybersecurity outside of the US. And we are currently raising a Fund 4 strategy, so very strategic for Europe. So those mega trends, they are not the only ones, where we put a lot of resources. And on the other side, we are convinced that, unfortunately, higher interest rates and deglobalization will dry up liquidity. Potentially, liquidity crisis is looming. And the idea is to bring liquidity, to be a liquidity provider where there are walls of liquidity missing, and in real estate financing, special situations, secondary businesses in private debt, and we think there are also very large opportunities there.
It's really a quite complete strategy. And when we have a deeper look at your value creation process, what can you tell us about that? How do you create that value, and how do you measure it?
So ballpark, we tend to avoid over-optimization. So we don't want to create value by performing financial engineering or by putting too much leverage on the strategy, which we think is the name of the game for the next cycle with higher interest rates. So when we provide capital to a company, we call that partnership capital. So we provide long-term, stable capital. But not only capital, we also provide network and expertise to the company, because we are convinced that, at least in Europe, value creation will mainly come from creating European champions out of national champions.
Okay.
And that's why it's very important to source deals locally, to find the national champions or regional champions and help them grow by keeping the entrepreneur at the head of the company and providing him the patient, stable capital to help him develop his business at the European or global level. So that's the first thing. The second thing is that we put a lot of weight on extra financial criteria. And we think that more and more in this new environment, extra financial criteria will create financial value. And also, companies not performing well on extra financial criteria will suffer a lot from a higher cost of capital, higher cost of financing, and higher cost of insurance. So we think that being a performing company and helping our portfolio companies to perform well on environmental or social or governance KPIs will help create financial value.
Again, a very interesting double thesis, so really from national to EU or international champion. Secondly, integrating ESG completely makes sense. Would you like to share one concrete example or business case where you created value recently?
Yeah, I mean, there are many of them, but as you may know, we are leading the way in private equity dedicated to energy transition. We launched in 2018 the first ever private equity fund fully dedicated to energy transition. One of the portfolio companies we have is a good case study. It's an Italian EV supply chain company called Eurogroup. They manufacture rotors and stators for electric car engines. It's a company created in the 60s, family-owned, still run by the family. We actually entered into, we sourced this deal opportunity about 2 years before they entered into a competitive process, thanks to the local sourcing in Milan. So the company is based in Milan. Also thanks to a very strong conviction that the EV value chain will be very dependent on this auto part, the rotors and stators to make electric car engines, and the conviction that the growth of the EV segment will be massive in the next couple of years. Then, thanks to the local sourcing and the local presence and the local dialogue, we've been able to execute this transaction during the COVID crisis, at a time when nobody could travel, and because we had the local presence, we've been able to execute this transaction on what we thought was a very attractive conditions. Then we brought this patient capital to Eurogroup, and the company went from 30 million of EBITDA when we entered the capital in 2020 to 100 million, so more than 3 times in about 3 years, and we helped them, joining the Milan Stock Exchange this year. Mm-hmm. So that's one of the rare IPOs of the year. And today, Eurogroup is one of the world leaders in what they do, supplying, Tesla, General Motors, Ford, European OEMs, being one of the world leaders in the EV supply chain.
This is quite smart and also pioneering. Thanks a lot, Thomas, for joining us today. It was really a pleasure to host you.
Thank you, Stefan.